Great to have you. Like you mentioned, a little bit of a pivot. We started a little bit later than usual. Um, we had some late cancellations from the other guests, but Jeremy and I discussed it real quick, and we thought it would be a cool experiment to do more like a one-on-one type, in-depth interview. And I think it already sounds like Jeremy is the perfect guy for it. Can't wait to get into it.
Yeah,
So yeah, welcome everyone to this weekly Twitter space. We always discuss the hottest topics in Web3 from a research-based perspective, as we'll do today. And today we'll be talking specifically about this wave of crypto ETF applications, specifically from TradFi players. So before we get started, I'll introduce MetricsDAO, myself, and then Jeremy. So the host of our space is MetricsDAO. MetricsDAO is a community of Web3 data analysts where you can learn, earn, and collect. And so be sure to follow them if you want to find out more. Now, these spaces are organized and moderated by me, Helix, and I focus on bringing out useful insights drawn from data and research. So, by working with top analysts, researchers, and experts, we decipher numbers and stories to help you arrive at measured perspectives. So, if you value well founded takes and are keen on taking a data driven approach, be sure to give me a follow. With these spaces and more, we bring clarity to complexity, one conversation at a time. All right, our ghost for our host, yeah, Metrics Dow is our host. Our guest for today, that's what I wanted to say. Our guest is Jeremy Nation from the Defiant. Um, Jeremy, you already gave a bit of a background, but
yeah,
yeah, feel free to introduce yourself and let's get into it.
yeah. I'm a staff reporter at the Defiant. Again, if you'd like to find a great source for fact-driven news content in the cryptocurrency ecosystem focused on the DeFi landscape, that is a great place to turn to. Myself and my colleagues are all endeavoring to bring you the greatest and most prescient news information there without delay. I have been persisting in this ecosystem for about 7 years. I got started at ETH News many years ago. Many of you might have read my articles there. If you didn't, I forgive you. I also worked at the Block more recently, spent about 9 months there until I joined the Defiant. I'm very, very pleased again to persist in this space. It is a niche, and I'm very lucky to have the opportunity to do something that I feel that I am talented. I'm a talented writer, maybe. um, but today, as you mentioned, we've seen a lot of interesting pivots from traditional finance players towards the cryptocurrency ecosystem in the scope of these ETF filings, and it kind of sheds a little bit of interesting light onto some of the different sentiment that we see now towards the sector from those traditional finance players who have kind of stood on the sidelines for the last, I think, years.
Mhm.
Some of them casting suspicious eyes towards digital assets. So, what's your take on that, Helix?
Um, okay, so I've been doing a little bit of research, obviously, and it is like you said, it's very interesting timing, also given the lawsuits from the SEC, the lawsuits with Binance and Coinbase,
Yeah,
um, and now suddenly we see these guys rushing in. Let's what I like to do is like first like create a little bit of context here.
sure.
Just for the people listening in, uh, can you give a quick explainer on what
Yeah.
ETFs are exactly? And like, okay, everybody kind of knows, but like, why?
Let's
Like,
break it down,
yeah,
okay? And
exactly.
an exchange traded fund, which is what ETF stands for, basically gives you the opportunity to expose yourself to an asset class without actually custodying that asset. Now, in the case of a Bitcoin ETF, if you buy this ETF, you're not buying Bitcoin, you're buying shares of a firm that owns Bitcoin or trades in Bitcoin as a part of the basket of assets, maybe solely Bitcoin, it might be others. In the case of Bitcoin ETFs, it is solely Bitcoin. And there are certain parameters around those that have been established so that the trading can be regulated, et cetera. You know what I mean? So if we look at existing ETFs in the space, I think there's only one that we can really look at. It's the Grayscale Bitcoin ETF, and this is an exchange traded fund that charges an annual management fee when everyone whenever anybody invests in it. And basically, again, you're buying shares of Grayscale, not Bitcoin. And because of this, in Grayscale Bitcoin Trust, at least, we've seen price deviations between the price of Bitcoin versus the price of the trust, therefore creating arbitrage opportunities. Now, that means that you can buy these shares at a premium, right? Assuming the price of Bitcoin goes up, or you might be able to then sell them if the shares price, go up. But again, you're not actually buying Bitcoin. You're buying something from a company that owns Bitcoin. So if Bitcoin does well and the company trades it well, the idea is, yes, you'll be exposed to some of the upside of that profit, right? It's a great thing for traditional finance, mainstays, high net worth individuals, people with capital that need to follow the regulatory climate's rules. They can't custody this stuff themselves. They can't go out and buy Bitcoin because, like, they're a family office or something like that, or a sovereign fund. They need a custody solution, so they expose themselves to digital asset classes by turning to one of these, perhaps BlackRock or Fidelity in the near future. We'll see. In order to expose themselves to that asset class without assuming the legal and regulatory risks that many have identified in digital assets.
Gotcha. Okay. And it seems like it's apparent from the news that apparently there's a big demand for those type of players to have exposure to crypto, and previously they couldn't get into it for the reasons you stated, but apparently they're ready to jump in because all of these TradFi players are applying to do BTC ETFs. You mentioned there's a whole host of them. You mentioned specifically Grayscale. I thought the application from Grayscale got turned down by the SEC, and Grayscale in turn sued the SEC, and that's still ongoing lawsuit. Is that correct?
Now, in terms of the Grayscale lawsuit, I assume that the Bitcoin Trust, because I've covered the Bitcoin Trust, I know the Bitcoin Trust, I know that it's operating now. Grayscale with the SEC may be related to a different filing. I do know for a fact that the SEC is putting pressure, as you mentioned before, on Binance, on Coinbase, and that there is some sentiment, and this has been expressed actually in a piece that we published. Caitlin Long spoke on this. There's the sentiment that some of these regulatory bodies may be clearing the field from the traditional crypto players in order to make it possible for traditional finance firms to get a foothold in the space. And this is something that, another type of thing that if you look at like the entire landscape here, this is the sentiment that people have, that there's kind of this cabal growing against these traditional players.
Yeah.
It goes back to some of the challenges that we've seen in terms of Gensler getting in front of Congress and not being able to provide very clear policy terminologies in terms of what may be registered as a security versus, not. In terms of digital assets, he was not able to provide a clear determination of whether or not Ethereum, for instance, was a security. So this idea that we have these players in the space that are like long-term players, Coinbase, Binance, that have been providing access to digital assets and custody solutions for digital assets under the auspices of attempting to adhere to the regulatory guidance, which has been very, very foggy.
Yeah, to say the least.
And then for these institutions that they have millions of dollars in volume, right? Yeah. For them to be cleared out so that these traditional finance players who may not have the crypto knowledge or necessarily the expertise in the field in terms of experience, they have that Web 2 kind of traditional finance experience. I can't speak for the efficacy of that statement that Caitlin Long said in terms of clearing the house for traditional finance players, but I certainly can say what it appears to look like.
And what? I think you muted. Yeah, you muted your.
Sorry, what it appears to look like. I didn't mean to mute myself. It would appear to look like that she's correct, based on the fact that following these lawsuits and pressures from the SEC against traditional institutions, you see a large number of filings and by the way, I meant to say not traditional institutions, but digital currency exchanges, then you see a large number of filing from traditional institutions attempting to gain a foothold in the space. It certainly does appear to have the look of an orchestrated event, and based on those who I've spoken to in the field, they don't believe that this was a coincidence.
Wow. Okay. That it's funny. We did a space on the lawsuits 2 weeks back, if I'm correct, and this
Yeah.
was one of the sentiments being expressed at that moment. You know, I don't know who it was exactly. It doesn't matter. But somebody raised the point that they thought this was that this SEC wasn't necessarily against crypto, but what they were trying to do is like stall all the like the real Web3 players, create chaos so that they can basically allow the traditional players to catch up because they figured out too late that digital assets were going to be this big thing and it's was going to happen now. So the SEC is stalling to allow, their the traditional players to get a foothold, let's say. Uh, so
And it makes sense.
that echoes what you just said as well. It's quite a controversial take, though. But why do you think it makes sense?
Well, all right. It makes sense in terms of how would you, and this is just a hypothetical playbook, right? If I wanted to forestall the innovation of companies that are Web3 incumbents, I would create legal barriers for them so that they must focus on managing compliance, whereby I would also, you know, expect in that interim period, the companies that I want to catch up will now have that opportunity, right? Because instead of X and Y company that provides digital asset services being able to focus on innovating those services, on paring down the costs and providing perhaps a more efficient interface for users, now they have to pay lawyers. And like at the end of the day, the lawyers always win, right?
No, I agree. It does make sense.
Again,
Uh,
that's a hypothetical playbook.
of course, of course.
So
Um,
that's, maybe perhaps too Machiavellian, but it certainly would appear to be a strategy.
sure. What would be another hypothetical explanation of this be that what would the defendants, let's say, what would the advocates of the TradFi players say
They're going to come down and say it's all about consumer protection. They're going to say that the people who are existing in the traditional finance space have the experience in years to provide an insular and robust infrastructure for consumer protection in the scope of digital assets. They're going to point to things like FTX. They're going to point to things like Terra Luna
yeah.
and other instabilities and other types of issues that we've seen, large-scale hacks. Um, the bottom line is we're in a very, very young ecosystem. So there are a lot of examples of fractures and faulty situations for them to go to. They don't have to look far.
Sure.
FTX is a fine example of how you had this, um, you know, mismanagement of customer funds. You had the token FTT, which had some kind of dubious background to it. All of these things gave the traditional finance players that are sitting on the sidelines the fodder they needed, the ammunition they needed to turn around and say, "Hey, look, this is an immature ecosystem." Unfortunately, FTX was one of the largest exchanges in the space. So it's very difficult for anyone to take a look at that and then say, "Oh, well, that was just one player." Like they were the one of the largest players. And you know, they say what absolute power corrupts absolutely. Yeah, I think we had an example of that perhaps with FTX. On the other hand, there are still institutions out there that have been operating under the auspices of following the letter of the law, right? And we see that with Coinbase very much so, I think, operating in the United States, uh, attempting to get clarity from guidance from regulators, and then not being able to get that. So these lawsuits that have come up and then subsequent filing of ETFs, I think are just, it's all part of the same beast here, which is an attempt to grapple this industry and bring it to terms with the people that hold, financial interest in consumer markets and those who hold financial interest in the growing cryptocurrency space. And finding a balance between those two is, I think, where we're going to start to see things take off.
Right. Yeah. And I think, in their defense, it's a good point, and I think a lot of people like Web3 natives, let's call them, who
Yeah.
are in it for the right reasons, also to some extent want regulation, or at least they want all these rugs and all these scammy projects to put an end to that, right? It's just like you said, it's very interesting then that like Coinbase is a perfect example. They follow the letter of the law. They request clarity so that they can do what they're supposed to do. But then they and we as an entire industry don't really get that, which is very frustrating. And I think also calls into existence, let's say, these type of theories like, okay, what else is going on? Is the
Yeah.
SEC playing dirty games, et
Yeah.
cetera, et cetera? Another thing that we heard about that kind of supports this notion, you could say, you could argue, is this new non-custodial crypto exchange. I don't know if you heard about that, the EDC, and it was launched by Fidelity, Charles Schwab, and Citadel Securities just
Right.
last week. Very peculiar timing. What do you make of that?
Yeah, so I think they're joining together with a number of other asset managers in order to try and enter this space again. And as we've said before, right on the heels of BlackRock filing, Fidelity is a huge asset manager. The implication of them turning around and saying, "Hey, we're going to custody crypto," at the end of the day, that means that Fidelity is going to buy a lot of Bitcoin or Ethereum or whatever they're trying to custody, right? To give other people an opportunity to hold it. This is probably going to drive prices, right? I mean,
Right.
billions and billions of dollars being poured into the marketplace, and so then we'll turn around and say, okay, we trust Fidelity and stuff. We trust them to hold this stuff because they have that, they have that Web 2 backing, kind of traditional finance, years and years of servicing an industry, right?
Reputation.
So, yeah, not just reputation, but like true experience to back that reputation, So, I mean, these guys are mainstays of the ecosystem. They have a lot of clout and capital. I would say that non-custody solutions are a result as symptom of no guidance from regulators. I think that if we had an ability to know, hey, here's how you can custody a digital asset from, oh, are you an institution? Well, these are the rules. Oh, are you a retail investor? These are the rules. If we could have very clear rules on that, then we wouldn't see people turning to like, oh, well, I keep my stuff in Coinbase because I don't want to manage the private keys because I think there may be some like issues with it being holding a security or something like that because I'm staking and I'm getting a return on my stake. These are the things that like the SEC, regulatory institutions could buckle down, they could get the work done, and they could put these policies out for us. They didn't. And because they didn't, people were turning to companies like FTX, right? And putting millions and millions of dollars in them because they literally couldn't custody the stuff themselves. I think that it's an example, like when you have people going into a marketplace where they have no choice but to custody with one person, it creates an opportunity for that entity, in the case of FTX, to do something shady. And it's not great. All right. And I don't want to think that Fidelity would do something shady. Of course not. Like, right. I mean, I've just lauded them for their years and years of experience in the space. But at the same time, centralizing that point of failure is not something that's good. It goes against the ethos of a decentralized asset management system, right? Because we want to decentralize the points of failure on the network. We want to make it so that there is no single bottleneck. Okay. And the idea, I think, is they could create a pathway that would, instead of driving people either to black markets or to centralized markets that present that risk that I just illustrated, they could create these clear policies that allow for self and sovereign custody. Just like I have a wallet in my pocket right now, I have $20 in it.
Mm-hmm.
I have sovereign custody over that cash. Okay. I also have a cryptocurrency wallet that has $20 of Bitcoin in it. Just like my wallet in my pocket, because I manage the private keys for those Bitcoin wallets, those Bitcoin addresses, right? I manage that. Like, it's the same thing.
Mm-hmm.
And I think people want that with their digital assets. They want that level of control. They want a level of privacy. And they also want a level of the capacity to comply. And I don't think that that's been given to them. And so I think that with the entrance of Web 2 companies into Web 3 and traditional finance players into Web 3, prior to having received any major policy change or like policy guidance on in an area where the industry clearly needs it, I think that we're coming up to a kind of like a rock and a hard place, and something's got to give. I perceive it will be a legislatory effort where legislators are like, and we've seen it. We've seen some of the bills that have been kind of put through the House, right? So I would expect that, you know, the SEC, I don't want to say it's a dog with no teeth, right? But like, it can bark at you and can't bite, you know. But the SEC right now is using these lawsuits as a means to enforce, but they are not in and of themselves able to enforce via the lawsuits. The lawsuits require a judgment in order to have teeth. So right now the SEC is like trying to see what they can do. And, you know, I was listening to a former chair of the SEC speak. His name escapes me. Please forgive me. But he was talking about how this is antithetical to a capitalist movement in terms of policy making for an American agency. The idea that if we're not losing, we're not suing enough people is not a stance that can stimulate innovation from my personal perspective. I believe that stimulating innovation means talking to people who are industry players, understanding the risks and benefits, and then weighing them in terms of consumer protections. And I hope that happens.
And putting some rails on the whole endeavor, let's call it that, right? So
Yes.
fail safes, if you will.
Yes. And what do those look like? Well, you know, it might be some type of insurance. That, you know, it might be some type of limitations. It might be some type of disclosure requirements.
Right.
It might be some type of income requirements if they want to start to like get this down. But at the end of the day, they need to understand that decentralized finance infrastructures are not built to exclude. They are built to be an inclusive means for anyone to access assets and exchange them. And they are built to be a means for people to do that without any one entity coming in and saying what you can and cannot do. So the guidance of these policies need to take into account the infrastructure of the systems from literally a technical perspective that they're attempting to create policies around. And I don't know if they've assessed that yet. I know that over the last few years, the aptitude for this legislatures and for agencies has definitely come up to speed to a certain extent. But does that align with political motivations? I don't know.
Right. That was going to be my question, because on one hand, we are really talking about like the ethos of Web3, you know, self-custody, like you said, sovereign money, have real control over your funds. To some extent, that might be, and I don't want to be super dark or negative, but that might be antithetical to what other powers that be want things to go down because they have vested interests. Is that not right?
No, you're right. And to a certain extent, the powers that be are used to a system that has, you know, somewhat loopholes, I think, built into it to maintain the powers that be, right? And cryptocurrency ecosystems, for the most part, are trying to build, I think, infrastructures around loopholes like that do not that do not have those types of loopholes. Because if Bitcoin had a loophole in it where anybody could just mint Bitcoin, right, or do something corrupt with Bitcoin, it wouldn't have the type of reputation. It wouldn't be the type of network it is. There are only 22 million Bitcoin, or is it 21? 21, I think. Yeah, there's only 21 million Bitcoin. So that finite number, right, is built into the system. There's no way, like, whereas with the tax code, right, you can say, oh, well, I own a bunch of real estate and I took a loss on the real estate market, so I don't have to pay taxes on a bunch of stuff, and I pivoted my capital into real estate. And then after that, you have a bunch of tax money in real estate, so you take loans out against that, and you still have the same access to capital, but you're not paying any taxes towards the infrastructure of anything. And that's literally how a lot of people operate right now with large assets in the large asset classes. So these loopholes don't exist in crypto, where it's like, oh, well, I'm a miner on Bitcoin, I have just as good a chance of getting the block as anyone else as long as I have good equipment or whatever. You know, it's a different system. It was built to kind of avert corruption, and we live in a corrupt society. It's a sad thing to say, but we do. There are levels of corruption. We can't plan for that, right? We don't go about our day thinking, oh, I know everything's corrupt, so I'm going to do this and this and this. No, but it happens, and we have to change sometimes what we get at the end of the day, because something corrupt happened, and we suffer from the corruption more than we benefit from it, I think, every time, because we're at the bottom of the scale. A lot of us. So
changing gears a bit and trying to,
sure.
we talked about, like, okay, one side of, we took one perspective on this whole thing, but could you also maybe argue for, the positive sides? Because some people are saying, like, this is a huge boon to, like, in terms of crypto adoption, right? And what will this do to prices, et cetera, et cetera? It's a huge stimulator. No?
Again, like the last big boom we saw, what was it? It was Elon Musk and Michael Saylor saying, hey, look, Tesla and MicroStrategies, we have a bunch of Bitcoin and we're bullish on Bitcoin. And it was like, oh, traditional finance institutions are looking at custodying this stuff, and they're taking this asset class really seriously. So absolutely, I think it's actually, there are very many people who are standing on the sidelines saying this is a bullish thing. I mentioned before, if these institutions do get approved, they're going to need to get Bitcoin, right? They're going to need to start buying Bitcoin.
Exactly.
Well, that's going to be good for the market, because then however many millions or billions of dollars that are going to back that ETF are going to be bought. But at the same time, what happens when you get a bunch of players consolidating Bitcoin? If BlackRock decides, oh, maybe they have an ETF or something like that for a while. Maybe something happens where the ETF kind of peters out. Now they're sitting with a giant pile of Bitcoin and they dump it.
Yeah, that's a good point.
Okay, but before that dump happens, they got to buy it, baby. And when they're buying it, things are going to be going up. That's just the way it is. When there's a demand, the market will go up. And so I'm curious to find out if they're going to broker some kind of OTC deal to get that Bitcoin. It would be really crazy to see if, like, Grayscale sells their trust to BlackRock. That would be something, right? And BlackRock manages that. I heard someone say that would be funny. I don't have any evidence of that, by the way.
Can you explain what an OTC deal is exactly, and why that's relevant in this context?
Oh, sure. So an over-the-counter trade, OTC, would be what would happen if, like, say, you and I talked to each other and said, look, you got 5,000 Bitcoin, and I have the equivalent cash that that 5,000 Bitcoin would get, and I want it all. So let's go meet at the Starbucks, and I'll give you, like, a sack full of money, and you'll give me the USB drive with the Bitcoin on it. Now, it might not go down exactly like that, right, in the case of an institutional trade, but like Coinbase, Binance, a lot of these major exchanges that might have thin order books, right, and wouldn't be able to necessarily use the exchange itself to serve a customer like BlackRock or Fidelity, well, they would turn around and say, look, we have an OTC trade that we can do for you guys. It won't kill our order book and thus make it look like there's like a massive shock to the market, either positive or negative, depending on what side of the long or short position you are. And that's how they do that. It happens a lot, actually, because again, exchanges have relatively thin order books. So they can manage retail trades, but they can't manage like someone coming in and saying, I want to buy $1 billion worth of Bitcoin. Like they can't do that. So they turn to over-the-counter trades to maintain the capital flows. Sorry, I got some excited puppy dogs over here.
Yeah, it's all good. It's all good. So if I'm understanding correct, what I'm taking away from this explanation is that it prevents volatility in the market.
Absolutely. And like, that slippage can keep traders from, panicking and stuff like that.
Okay.
The lack of slippage, I should say.
Rather. Yeah. All right. Well, what do you think? Are these applications going to get approved? There's a whole host of them. BlackRock, HSBC Hong Kong, they were approved, I think. ProShares, WisdomTree, Invesco, Bitwise Asset Management, Volatility. These are just the ones that I came across in my research this week. But
so
I have the feeling there might be more.
BlackRock, let's look at their track record, right? I think they had one filing batted down by the ETF in 2014. It was related to wanting to have obfuscation between like the supposed like transactions that were being. Let me rephrase that so it doesn't sound like a jumble of words. They wanted to have a non-transparent trading terminal, and basically they said they tried to argue to the SEC that a lack of transparency would allow the fund managers or something to that extent greater flexibility in their ability to engage in trades, and the SEC was like, that's not going to happen, and they batted it down. As a matter of fact, that ruling has kind of shaped the whole ecosystem since. It has given the precedent that there should be insight. The SEC wants to know what you're trading and what you're doing. They're not okay with these kind of like opaque management styles, right?
Okay.
Yeah. So that black box kind of thing, that doesn't work. BlackRock's black box got boxed. So on the other hand, BlackRock has like got every like over 500, I think, or something, 545 or something like that, filings passed.
Yeah.
So they have an amazing track record.
Yeah.
And I would be surprised if they didn't get this one passed. I kind of have an inkling feeling like once BlackRock is the one that says, okay, the gauntlet's down, like
gonna open the floodgates.
Muhammad Ali's in the ring now, like he's the king.
Yeah.
I'm expecting a knockout. Like
Yeah. I hear you. Okay, and then all these others gonna probably follow by, like, because it creates a precedent. No?
It remains to be seen whether BlackRock will create the precedent, but I would expect that by getting approval by the SEC, other ETFs will just copy and paste BlackRock's management style or like whatever they use to get passed, and the SEC would then have no standing to deny them because they approve BlackRock.
Exactly. Okay.
And again, BlackRock is going to buy a bunch of Bitcoin. All these other exchange traded funds are going to buy a bunch of Bitcoin. They're going to buy a bunch of Bitcoin, and then people are going to start buying the trust, and we'll see kind of this trickle through, right, where all these high net worth individuals, family offices, sovereign funds are now able to access a Bitcoin style asset, which is not Bitcoin. They will not be custodying Bitcoin. They will not be exposing themselves directly to any Bitcoin, but they can get a little piece of that action, right? And so then we'll start to see what happens.
Okay, so we're talking about Bitcoin a lot, obviously. The question that comes up is, like, all of this, if it goes through, if it goes through, I guess. What will there be a trickle down effect on like the wider Web3 system? Like, how will this impact Ethereum and all the other blockchains?
It's so hard to say. The SEC has been pretty clear about not classifying Bitcoin as a security, right?
Right.
And other assets, we cannot say that clarity exists. So I would say that in order for us to really gauge the capacity of trickle-down economics in the terms of this filing, should it be approved, we would need to have that clarity so that we can then say, okay, well, based on this guidance, the things that are not securities may fall into the basket of potential assets for which ETFs make sense. However, in the case where they are securities, perhaps by the SEC's standpoint, but maybe not by the other people, let us see how that shakes out. I don't want to say anything, but like in the cases where they're not clear, let's say that, you can't say one way or another, because filing an ETF for something that has no clear regulation on it, you're not going to get approved, I think.
Okay, and if you forget about that for a second, just purely let's say that the BTC ETF is going to get approved. That's going to mean there's going to be a whole lot of BTC being bought up, all that money going into crypto. You're saying that doesn't necessarily mean it's going to be a huge stimulant, let's say, for the rest of the ecosystem.
So in terms of the price action, when Bitcoin goes up, it is the rising tide which lifts all boats.
Okay.
So there will be some price action, and there will be some beneficial effects in terms of these other assets. But I don't know if that will be as a result of additional ETF filings. It will definitely result from the price of Bitcoin going up. Like if these guys are buying Bitcoin, Bitcoin goes up. I think we've seen cycle and cycle and cycle again. Every time Bitcoin goes up, so does Ethereum. So do all the top 10, okay? There are some kind of divergence amongst altcoins. You're going to have a certain day where every dog has its day. Some altcoin just goes crazy for some reason or another. We saw meme season took place just a few months ago. Yep. Same type of thing. But those are the anomalies. Bitcoin is the one that when it goes up, you can look at the charts, all right? The data is there to back it up.
Maybe there's also a certain effect of if these ETFs go through, then it kind of validates Bitcoin in the first place, but crypto in the extension of that. And yes. Maybe that means that investors are more likely to allocate capital into projects in the space, etc.
Yes. And watch closely, listen to what they're saying and watch what they're doing. Jamie Dimon for a long time at JP Morgan was banging the drum against digital assets. He was saying this is not good, blah, 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 blah. But at the same time, they were working on their own Ethereum style blockchain, product. And then furthermore, JP Morgan, I think, has pivoted towards being a little bit more accommodating in terms of digital assets. So all of that naysaying may have just been creating a sentiment like, hey, we're going to make it more difficult for people to perceive this as an asset as we position ourselves. And then boom, now everybody's getting in, right?
Right. Interesting. Okay, I got one final question, I think.
Okay.
So I came across this, these ETFs, I believe most of them are futures ETFs, right? And that stands in contrast to spot ETFs. Could you explain what the difference is exactly?
So an ETF future, you're trading on the price of what something will be, right? Spot ETF, you're trading on the price today. All right. So, if you buy an ETF and it's a spot ETF, you're going to be seeing more price action correlating to the volatility on a daily basis. Whereas a futures ETF, you're hoping that the trend goes along the lines of what your bet is, right? So if you're betting it's going to go down, you're shorting it. If you're betting it's going to go up, you're on a long position. And to my understanding, that's the basic difference in the most simplified version.
Okay, gotcha. Is that maybe so? What I'm hearing is, or what I take away from that is that spot ETFs might be more volatile, whereas futures less so, and maybe that's the reason why most of these applications are for futures ETFs.
I believe so.
Interesting. Okay. All right. We're almost at the top of the hour. Anything I forgot to ask or that I should have covered that I didn't?
No, I mean, we've had a pretty all-encompassing conversation on this.
Yeah, it was awesome. Thank you for your insights, and it was interesting to do more. Like usually it's always a panel, and now it's much more like a one-on-one. So it's much more, to some extent, you can go deeper, and it's more like a conversation type thing. So that was very interesting and fun to do.
By the way, I think we got it
Yeah.
backwards on the ETFs thing.
Okay.
I think futures ETFs exhibit more volatility.
Oh, interesting.
I just want to go back on that. I don't think we got that one right.
Good.
I think it has to do with just the leverage involved, right? In futures contracts, you've got market distortions, rollover processes, a lot of these things. Like, you're betting on a price, right? You don't know where that price is going to be. And so I want to roll back and just make sure that we don't have the wrong information going on.
No, that's good. That's good. Who knows? Maybe we'll do another space sometime in the future, and we can go deeper into this specific topic. Could be fun. We covered a lot of ground today, like you said, but there's always more. You guys put out a bunch of articles on this. Where should people go? Like, if people want to learn more about what they heard today, what we talked about today, where should they go? Like your website, reports, newsletters, you name it.
Absolutely. So if you visit us, Defiant News at Defiant News on Twitter, thedefiant.io is our website where you can see the latest insights on this type of situation going on in the ecosystem. And this isn't going to be the last big hustle, I'll tell you what. So if you want to stay abreast of all this information, myself and my colleagues are dedicated to bringing you in-depth coverage with fact-driven resources and all of the knowledge that you'll need so that you can arm yourself with information in these tumultuous waters of the cryptocurrency ecosystem.
Awesome, perfect. People, if you're in the audience or you're listening back to this, replaying it, you should definitely give Jeremy a follow. Um, yeah, it's been awesome. Thank you for your time, for your insights. Yeah, I want to thank MetricsDAO for the host of today's space. So MetricsDAO is a community for Web3 data analysts where you can learn, earn, and connect. So be sure to follow them if you want to find out more about that. Also, these spaces are organized and moderated by me, Helix, and I focus on driving useful insights drawn from data and research. So by working with top analysts, researchers, and experts, we decipher numbers and stories to help you arrive at measured perspectives. So yeah, if you value those well-founded takes and you're keen on taking a data-driven approach, be sure to give me a follow. And with these spaces and more, we're bringing clarity to complexity one conversation at a time, as we did today. So thank you, Jeremy, and thank you, everyone, for being here. Have a good one.
Yep, I look forward to joining you in the future. Take care.
Definitely. Talk soon.